Alright, here is October 8th, so the day after the first video. October 8th, it is 8:50 in the morning. We did pass this account. All we needed was that much more. So we're pretty much on the dot. This is a short market open trade. I trade two different ways technically, so this was the trade. It was a really short trade. It was pretty obvious where market was gonna go. Here's it on a 1 minute time frame. In the trade for what? 2 minutes? What was it? In the trade for a minute on the dot. So honestly, it wasn't bad. If we're trading continuation, and these are our targets for the day, so it's gonna break this range right here that it was in. So whichever way it broke the range, we have places to trade. So it broke upwards from it, it's gonna tap into the gap closest usually. So if I was gonna trade on, say, an Express or even this one, I needed more profit, I would simply just trade continuation up to probably the 1 hour gap because this 1 hour candle is going to push more than likely. I mean, look, it's already ripping. It's a good candle to get in on. So I would trade continuation after that, but I mean, I couldn't make any more than already made. But if I were to, this would more than likely be the target of the trade. And for continuations, I'm saying I call it a retest. It's retesting the price. So this candle, it went all the way down here. Price didn't want to go any lower than that. I mean, we had support from this other candle, right? This candle right here could just rip down, but clearly it retested price, and price was bullish enough it didn't want to. Same with this candle. It tried coming down here. You could even call this maybe as a false breakout. It went lower than this candle, right? But still, it closed up. It closed right here. So price is bullish. You got to think how bullish price really is if it closes. If price can come down here and then close right here and then some, you got to think, oh wow, price is really bullish. So retesting for me, that's what it'd be. I look for the candle. I usually like to think 50% of the candle being covered, and then I'll enter, and then it'll close somewhere right here, either for bullish or bearish setup. But that would I call a continuation, you know. And then for volume, we had a bullish above the average moving. So this black line right here, that's how I use it. There's a lot of more other stuff that goes into it, but essentially they can tell you early signs of reversal, continuation. We had two bullish closes above average volume, right? So I'm like, oh, we're gonna keep on ripping. Cool. That's not gonna be my only way of thinking about it, but it's one of the ways to think about what's price gonna do, how is price moving. You know, I mean, this candle, it met this bullish candle with a bearish candle, both above average volume, but yet price still went this way. You got to think for these three candles, yeah, for these three candles, it's one 15-minute candle. Then this candle closed bullish. So I'm like, okay, so we're still bullish. That's the way I would look at it. That's the way I trade continuations, market opens. That's just kind of the way I'd still go about it if I was in this trade, but again, I really wouldn't need much more. And I guess we can go more into it. If I was in this trade and I see this doji candle, I started really paying attention to them. because they happen quite often in the market, and it's kind of market confusion. The market doesn't necessarily know, but if it's in the middle of a trend, usually you'll be all right. But if it's towards the end or the start, I mean, maybe it could be a sign of reversal. But use discretion. It doesn't always mean one thing. To purely base the way you think about the market on one candle makes zero sense. You know, you probably want to look at the past 50 candles. You know, when you're taking large amounts of data, you can't just say, oh, this one candle. Like, I wouldn't do that in this trade. I would look at the bigger picture. You know, what is the bigger picture telling us? That's one thing I've learned this past week, and it's been phenomenal. So this candle's absolutely ripping. What is it? Um, 45 will close at 9 o'clock. I mean, I'm not gonna say I think, I believe, but more than likely it'll close in this 1 hour gap. Come back if I'm wrong. I don't know. I'm not here to be right or wrong. I'm just here to see what is it telling me. So this happened in the middle of the uptrend. We have this weird candle. So if I was in it, I'd pay more close attention to what price does afterwards. To get a deeper look, I don't ever use the 1 minute, 5 and 15 minute. But to get a deeper look on what price is telling me, well, okay, we're still green. The volume on this I typically ignore because, I mean, there's just a lot of noise in the 1 minute, in my opinion. But for this, I did look at the 1 minute while taking this trade. I was like, okay, we ripped. Usually for market open trades, I'll look at the 1 minute, but I'll place the trade on the 5 minute and then use 15-minute structure. It might sound complicated, but it's quite simple. But yeah, this would be a phenomenal trade. If anyone took this trade, it'd be absolutely amazing. I mean, little resistance, you know, clear sign of where we're headed. I mean, absolutely, like, for me, an A plus setup, A plus plus, whatever you want to call it. But yeah, that was my trade today. That's how I would trade if I was still in it. And that's the way I think about things throughout the trade. And now, broke the range. I mean, I had an idea where price was going, so I took the trade. I have a market open system, and then I have a continuation, or just like a trend system following like trends. This would be in the system. So the trend system, we break a range, we retest it, price is more than likely to continue. Given discretion, it's more likely to continue. Like we have these gaps, without these targets, where are we headed? You know, you don't really know. We don't really know. So that's why I use these as my targets. I know some people use them as entries, exits maybe. These are my targets though. They're really good targets. That's where price wants to go. Sometimes liquidity up down here. So I'm not going to use liquidity usually as my target, but if price breaks say down here and I'm like, oh, I could be targeting further these lows, and then rip to this one. So yeah, that is October 8th, 2025 recap. Pretty short, pretty straightforward, pretty simple. But yes, I'm gonna be uploading every day for. I'm just gonna do every day for more than a year, and yeah, just documenting it all. So I can look back one day and be like, wow, I was either really smart or really dumb, you know? And plus, yeah, that's kind of the reason. So even this, I would say, wow, we're really bullish. More than likely to continue if price wants to retest. I'd be like, oh, we can retest this right here. Wow, look, see, target would have hit. But that's how price really is the way it is. But yeah, that is October 8th. Pretty much the whole entire recap. I'm trying to think if I'm missing anything. These were yesterday's trades. We reviewed them. We figured out the reason we were wrong. Reason we were wrong was I completely ignored a main part of the way I trade, which is very important. I took a lot of time looking at it. So we have this right here. Trend ends. That doesn't mean trend just reverses immediately. Given some discretion, that's not how they work. So it's not going to be right here and then immediately down after you know all that. Definitely not. Usually throughout the market, you can see these things will have an uptrend. Say it's trending for a bit, and then say we have a reversal. It doesn't go straight down, which I don't know why I even didn't even think about it. Kind of just went over my head. Everyone has those days. It's gonna consolidate range, build up energy, balance out price, and then continue downwards. So really simple fix. I don't know how I would have. I don't know. Some days you just have those things where your brain's lagging, and that can cost you. Clearly, it costs it. That's what I review. Do like a report about it. But yeah, usually I wouldn't have taken a trade after that. But the rule of thumb is going to be a whole entire trading until I figure out the reason why I lost and went outside my rules. Then I can only return. And yeah, this is October 8th. Setup, continuation the way I trade it. Things I look out for still, just slight overviews about the system. And account path, trades about yesterday, two potential ways I would trade it.